Thank you for joining us today. Our topic today is 3 things that can lead to a recession. We wanted to have that conversation with you today because we continue to have dialogue about, what's going to slow this economy up. We've had a lot of topics such as tariffs and taxes and interest rate increases, and yet the economy and the markets continue to move forward. So on that note, I've asked Trey Booth to sit here with me and just have some of that dialogue. So Trey, you gave a great report in our meeting. Talk about that.
Yeah, so the reason politics seems to be a focus of the market right now is because there's 3 things historically that lead to a recession. One is growing inflation, which we don't see right now.
Right.
The second one is an exogenous event, something out of the norm that you don't expect, a world war of some sorts. That's impossible to predict, and also we don't see that.
Right.
And the third is something you can kind of is tangible that you can see, and that is a policy error, either by the Fed or some sort of political entity within the U.S.
So in other words, if the Fed raised interest rates too fast
Exactly.
and really slowed up the economy, that could cause a recession.
That could cause, and historically has caused a recession. Or you have someone in the White House or Congress make a huge blunder by either poor tax reform or some sort of regulatory impact.
Okay.
So those things historically have led to recession. The reason that policy is in the focus right now is because everything else seems to be going smoothly. So the small business optimism is at an all-time high.
Correct.
Consumer sentiment is near an all-time high. Unemployment claims are at a 45-year low.
Sure.
So everything seems positive. So the only downside possible is this potential policy error.
Right.
And so that's why people are focusing on it so much, because other than that, we don't see there's really no risk of a recession right now in the markets.
But there's a saying, bull markets climb a wall of worry.
That's exactly
and so
right.
as we continue to have these topics such as the recent tariffs,
Right.
With China, it keeps everybody paranoid enough to not get euphoric.
That's exactly right. The last thing we want is to be overly optimistic, and that's what we saw. We may have been overly optimistic at the beginning of this year, and that's why these healthy corrections happen often.
Right. And then the other point is the volatility that's picked back up in the market is actually the norm, where 2017 was abnormal.
Right. All-time low volatility in 2017. Right. That's not to be expected. It's just people kind of forgot what the norm was.
Sure.
And so those 3 things, the only one that's potentially is the policy error, and that's got to be a pretty big policy error, because I think no matter which political party you're in, you can think back to several recent presidents that have made anyone would consider policy errors that didn't lead to a recession.
Right.
And so it's got to be pretty big. And so just the talk of tariffs, I wouldn't say is really a policy error.
Right. And so on that note, you need to know we are really focused on the deregulation and the pro-growth tax cuts that we've experienced. We fully believe that the research and the media out there haven't come to the point to really digest what's happened here, and that also we've had an uncoupling from government regulation that's freed up business to really grow.
That's right.
And so we always are watching to see when a recession could take place, but I think you did a great job in the meeting, and we wanted to share it with you today as to what could cause a recession or for this market to slow up. Have a great week. We'll keep you updated.